Happy Monday, everybody. I hope you had a great weekend. Welcome to February. Today is February 6th, and this is your first February Monday market update this year. Last week was a big one, and we can actually argue some major shifts occur. Let's jump in, recap last week, and preview this upcoming busy week. Last week was all about earnings, the Fed, and jobs. Yep, pretty much like every other week we've had lately. There was a down start to the week last Monday as stocks took their cues from eco data in Europe and the U.S. data as well. Stagflation started to be talked about again. Spain's CPI jumped back up to 5.8%, a full 1% higher than expected. French CPI also bounced. All people need to see is that blip back up, and they can't stop thinking about the 1970s here in the U.S. Quick refresh, the Fed hiked rates, thought they had it under control, and then inflation came back strong, and the Fed had to come back stronger. This is the big fear when we see data turn around again. The idea of peak inflation in Europe specifically is being called back into question. As the Fed meetings are about to start, as well as the ECB and the BOE, fear came back into the markets, and the Dow was down about 0.75%, S&P down about 1.25%, and the NASDAQ down almost 2%. If this is not your first Monday market update video, then you have certainly heard me talk about everyone going from one side of the boat to the other. Well, Tuesday brought that again. Markets picked up all the losses from Monday and then some. Eco data from Europe was the source of red in the futures before the open, but just before the open, the employment cost index came out for Q4. The index rose 1.0% versus the 1.1% that was expected, and that was enough to wake some people up. Stocks moved cautiously higher as traders were now positioning for the Fed meeting. The announcement that was due out on Wednesday, and the presser from Jay Powell. The optimism was amazing. Going into the close, the markets were all up. The Dow was up over 1%, S&P up about 1.5%, the NASDAQ up almost 1.75%. This was the end of month one for 2023, and the S&P had its best January since January 2019. Wednesday and February both started in the red as the ADP number was softer than expected. Weather-related was the latest comment on that. Then the JOLTS numbers hit, and at over 11 million jobs outstanding. That number has turned and moved back upwards when it was expected to go down. Fed was not counting on that, nor were they hoping for it. So before I get into the Fed, let's talk real quick about Meta. You remember the old Facebook? Well, they've been the punching bag. The stock has been the punching bag for a while, and after the report and conference call last week was up over 20%. As the tide has turned, at least the sentiment side. One stat that I'll call the Meta fun fact of the day. Daily active users of Meta's family of apps, Facebook, Instagram, and WhatsApp, was 2 billion people. Monthly active users, 3.7 billion people. Now, in case you're keeping score, that's nearly half of all humans on Earth. Now let's go back to the market. The waiting to hear from Jay Powell. By 2 o'clock Eastern, the markets were primed and ready to go. The announcement was initially seen as hawkish. Stocks and bond yields fell. Once Powell began to speak, everything turned the opposite way. So much was made of the way he addressed things. Very confident. And that plus what he did not say, the markets are clearly betting that he will not get rates above 5%, as they say they will. He was not as aggressive as he has been, and the markets took that as soft, so away it went. Believe it or not, one of the turning points was one of the press conference questions simply asked whether or not the Fed is even discussing a pivot or rate cut. And Powell's response? Everything's on the table. And off to the races. Now, does that sound familiar? He's pretty much said that every time, but the algos in the markets were listening with something else in mind this time. The Dow was flat, the S&P was up 1%, the NASDAQ was up 2%. The beaten up names ran hard, and they hit you with a spoiler. They ran into a wall. I'll explain that in a moment. Wednesday's gains were extended into Thursday as the post-Fed party kept going. Central bank news, aside from the Fed, the Bank of England raised rates and indicated they are near the end of their hiking cycle, also known in the U.S. markets as a pivot. ECB also raised, but they are still on track for a bit more hiking. U.S. eco data was mixed still, but no one cared. With Jay Powell being seen as pretty dovish, all eyes were on the jobs numbers coming Friday morning, and with his comments, it would have to be a big surprise to change the course of things. Wait for a minute on that note as well. After the close, we did get a huge blast of earnings. Apple, Amazon, Google, Ford, Starbucks. Remember that wall I told you about? Not one of those companies had a good report. All of them disappointed, and even the rose-colored glasses couldn't keep that from weighing on things until the rose-colored glasses took over. Overall, into the close on Thursday, the markets added more. S&P up another 1.5, NASDAQ up 3.25, and the Dow was down just a hair. Friday brought the last major market moving news, and what I mentioned a few minutes ago, we had earnings, we had Fed, and now jobs. What a number. The January jobs number was nearly twice what was expected on the strong side of surprise, and that made everyone rethink the prior few days. Was it enough to change things at the Fed? Overall, between the high-flying tech stocks that were up so strong since Tuesday and the earnings and the jobs numbers, the market turned around and sold off for the day, ending pretty close to session lows. At the end, S&P was down a bit over 1%, NASDAQ was down a bit over 1.5%, and the Dow was down less than 0.5%. The NASDAQ did stay positive on the week, up 3.33%. S&P also held in to be up over 1.5% for the week. The Dow was the only outlier, down just a bit for the week, 0.15%. Overall, at the end of the week, there were a lot more questions and answers, and though things still are looking very optimistic, maybe overly so, there was some cold water thrown on that. So what does this week have in store for us? We're going to go into February with a few stats on our side, good stats on our side, if you're in the bull camp. Per LPL research, the trifecta is in. Positive returns for January, positive return for the Santa Claus rally period, and a positive return for the first 5 days in January. Just to hit this, it's only happened 31 times since 1950, and the S&P on average in these times has added 12.3% from February 1 to December 31st of that year. 4 years that overlapped with recession, annual returns were all positive and averaged 34.8%. So if there's been anything that the past few years has taught us, take all that with a grain of salt. So back to this coming week. Many, many more earnings and some big names too. Disney, Pepsi, Uber, PayPal. Starting Tuesday, you'll be able to see Fed heads on TV as easily as catching a Law & Order episode. The biggest speech will be Powell tomorrow. This will be his big chance. He'll have the chance to push back on the market reaction. If he does not, a whole new plan may be required. He'll be joined this week by Barr, Williams, Cook, Bostic, Kashkari, Waller, and Harker, all speaking throughout the week. Eco data will have some of that too. Jobless numbers again on Thursday. University of Michigan inflation and sentiment numbers will be into on Friday. I want to focus you back on a few items. First, as I mentioned, the valuations are key here. We can get good eco news, but if the earnings mimic the dire look ahead that Apple, Amazon, and Alphabet left, we'll need more than Powell's cheerleading. Remember, earnings drive markets over the long term. One more item to keep an eye on. If, in fact, the Fed is no longer seen as the most aggressive central bank, watch the dollar, down from 115 last year, but back up from about 101. This will make a difference. So as you can tell, things are not going to get much quieter. I want to remind you, this video is in the weeds for what's happening day to day. If we try to focus our planning on just this, we'll go astray. This is helpful information, but please know that we're working every day to separate the signal from the noise. The planning that we talk about in our meetings, and again in the Friday planning videos, is focused on being clear with your goals and how to do all we can to reach them, no matter what Powell, the Fed, or eco data looks like. Please keep in touch. Let's be sure to have a plan for 2023. We're already 1 month in. Come back on Friday and stay in touch. Have a great week.